New highs.
James, what an amazing couple of sessions for the US market as well as the Australian market. On the US market, of course, we've been watching the Dow Jones Industrial Average, which hit an all-time record high last night. If we have a look at the Dow and how it's performed, this is just a chart of the Dow, and this is the one-year chart. In fact, just in the year to date, of course, we're just into the third month of the year, we've seen the Dow up by 9%, but it's been an extremely impressive performance. If we have a look at the 10-year chart for the Dow Jones Industrial Average, this is what it looks like. We saw the low back in March 2009, and since that low in the global financial crisis, we've seen the Dow Jones Industrial Average rising by 112%. Now, the good news for US investors is that we've actually seen values falling in that period of time. While stock prices and I guess the Dow Jones Industrial Average are higher than in 2007, we've actually seen valuations fall. In fact, if we have a look at what the market's trading at. Back in 2007, it was 17 times the estimates for earnings for the year, and at the moment, in terms of the US, we're seeing it trading at 14 times estimates for 2013. So while we're seeing stock prices rise, I guess the key message is that in the US, we have seen it supported by earnings growth. It's been helped along by quantitative easing and the very low US currency, which has helped US products being more competitive offshore, but we have seen quite strong earnings growth. In comparison, the Australian market doing pretty well today as well. If we have a look at the intraday graph for the Australian market, this is what it looks like. We have a look at a one-year chart for the Australian share market. We've been doing pretty well as well, although not as good as the US stock market. We haven't seen the same level of earnings growth. The high Australian dollar, of course, has been a key headwind, as has the volatility in commodity prices. And if we have a look at where the Australian market is trading at, we're trading at about 15.5 times FY13 earnings. So not looking that cheap in terms of the US stock, in terms of the Australian stock market and valuations. And if we have a look at a 10-year chart for the Australian share market, looking a little bit different from the US. In fact, we saw our all-time record high back in 2007. That was at 6,851 points. We still have a fair way to go, but the US market certainly has been helped along by strong earnings growth and that weaker US dollar.
Your thoughts on the divergence that we've seen, and would you expect us to continue to catch up? Well, I suppose it's hard to do it if the US, the Dow, keeps rising like it is.
Absolutely. We often say that the market opens with the US market and closes with the Chinese market. And I think the Chinese market has had a bigger influence in terms of the Australian share market, in terms of the Australian economy as well. And that's been a key difference in terms of how the markets have performed as well. If we have a look at the US stock market, let me just bring up the last 10 years again. This is the last 10 years in terms of the Dow Jones Industrial Average. Now let me bring up the last 10 years in terms of the Australian market with the benchmark ASX 200 index. A very different looking chart, but then if I bring up China's stock market, the Shanghai Composite, this is what it looks like. And you can see the similarity in the shape of it compared to the Australian market. Now, we haven't done as badly as the Shanghai Composite, but you can see that the performance of the Australian share market has been somewhat in between the US stock market as well as the Chinese stock market. Now, that makes a lot of sense because a large part of our market is to do with the commodity-based space, and that's really being driven out of China. And so when we have a look at the Australian market, traditionally we have had very strong ties with the US market, but now we are seeing a bigger influence from China as well, and that's reflected in the shape of the graphs and the divergence that we're seeing in terms of the Australian market versus the US market as well.
Julia, I mean, do you get a sense of the outlook then if for our market?
Well, if we have a look at what's driven our markets along, it's really the financial space which has been powering it along very strongly. And we've seen the same thing today where the banks have been outperforming. We saw a very strong performance coming through from the big four banks, and that's been helping. It's a yield play. One thing that's been letting our market down is the material side of things. And if we have a look at commodities, the commodity space, we've seen iron ore prices down overnight. And if we have a look at the forecast, you know, Rio Tinto has been very open that in the next 18 months, it does expect the iron ore price to fall down to more sustainable levels at 100 US a tonne. So China, with its 7.5% rate of growth, it still bodes for a bit of softness in terms of that commodity space. And really, if we have a look at what's powered along the Australian market, it has been that financial space. It's been very impressive performance by the banks. In fact, in just the year to date so far, we've seen ANZ up by 17%, CBA up by 12%. We've seen our NAB gaining 25%, and we've seen Westpac up by a massive 22%. And if we have a look at the banks in the last few years, well, since the global financial crisis, where we did see that really that lockup of funding, what we've seen is ANZ up a massive 132%, CBA up a massive 155%. We've seen NAB up by 86%, and we've seen Westpac up by more than 100%. That's not including the dividends. And if we have a look at what's happening in this banking space, it's a combination of the cost of funding decreasing and the easing of funding pressures. We've also seen some very strong dividends coming through. We're seeing efficiency gains as well, and that's really combined together to help the banks in terms of profitability, in terms of lifting their dividends, and in terms of stock price performance as well. So if we have a look at what's driven the Australian share market high, it hasn't been the growth area of the market that we usually expect, like the energy and the material space. It's really been the financial space and some of the cyclicals.